What's going on, everybody? Check it out. We are live August 17th, 2020. Um, One third of the U.S. population has not paid their mortgage. I think the unemployment, even though some of it's come back after coronavirus, the shutdown, all the kind of service industry jobs, some of those jobs have come back. But yeah, look at this. We've got two different worlds that are becoming very evident. Investors predict the Dow at $50,000 in just 5 years. Now, remember, the Dow crashed to about 25, and now it's back up to 27. $50,000. That's pretty crazy in just 5 years. Now, see, that makes sense, but I think there's a lot of people who can't really agree whether there's going to be a correction or not. And if there is a pullback and a correction, we all know long term everything ultimately becomes more expensive because it has to. But here's another one: new savings target for a modest retirement, $8 million. What do you guys think? I guess I'm not sure if I can open these in the viewer, but what do you guys think? What do you guys think? $8 million. I'll just read you a little portion of it here. The 4% rule has long been used, blah, blah, blah. Okay. See, yeah, you got to look, guys, do your own calculations, but they're just saying that, hey, $8 million is the new savings retirement target. And really, look, what it comes down to in retiring and determining what your capital is, your income, it's really, what are you going to do with that income? Are you going to buy stocks? You're going to buy dividend stocks? You're going to invest in real estate? How do you manage the money? It's not just having the money that, will help you retire it, but how do you manage the money once you have it? And that's where, I think this whole concept of being a millionaire gets taken out of context, because it's more important, to be a millionaire in how you think about money, how you manage money, and actually manage money properly, because you can make millions of dollars, but if you don't manage it, what's the point? It's easy to waste money. It's easy to throw money away. But, when it comes down to, retirement, quote unquote, or, look, at the end of the day, you shouldn't ever think about retiring. You need to find something that you're going to do. You need to find your purpose. This whole idea of, just retiring, making enough money, putting it in the bank and going and sitting on this. Look at this guy. You can barely see it, but he's sitting in a hammock in the beach. Just going to kick back with, just spend 30 years of your life working, 40 years, 50 years, 80 years, just to get that $8 million and then go kick back on the beach. Well, you don't need $8 million to go kick back on a beach. There's plenty of bums in Hawaii. You can go pitch a tent and hang out on the beach all you want. But the fact is, it's all about understanding money, understanding what to do with it, and how to manage it. So in another video, I'm going to talk to you guys about some of these base concepts, what money is, how it works, what they don't teach you. That's kind of, look, it's important to know. It's important to know. Because the reality is, I don't care how much cash you got in the bank, I could find somebody who would make you look relatively poor. And I mean completely destitute, even if you got a couple mil in the bank. Because the fact is, the truly wealthy, I'm talking about, you don't even reach that caste until you're in, the top 1% of the 1%, which I think is a net worth over 100 million. I don't know exactly what it is today, but obviously the gap gets bigger, the inflation occurs, and most people gotta understand that wealth is a mindset. Wealth is a mindset. So here's what happened today. Dow Jones, a little bit of a little nick down, but look, 27.8. It's rebounded and it's continued pushing higher since a couple corrections during the coronavirus. Looks like oil's rebounded a little bit. just a little bit of a pushback. But leave me a comment, guys. Like, what stocks do you guys like? What do you invest in? What are you interested in looking at? We've got a lot of people asking questions. What tech stocks? What are the tech stocks? Well, look, I like to follow Warren Buffett's advice, which is, look, if it doesn't have a dividend, don't buy it in terms of stock, paper assets. Why is that? Well, there's no guaranteed return unless you get a dividend. Again, you can lose a lot of money in these stocks, but I'll just give you guys some baseline analysis, right? I'm not a huge trader, but I do follow stocks, understand, fundamentally. Look, Chevron, right? In 5 years, kind of average is, your lows at, 75, 80, your highs are above 100, 110, 120, during that little coronavirus scare. Look at that. You could have bought this stock for $59. Today, still at a decent price, $90 a share. You're at a 5.5% dividend, 5.68, which means every dollar that you invest in the share, you're getting a guaranteed return. And, so look, let's just look at that concept, right? If there's no dividend here on a stock, then what are you actually buying and betting on? So most people buy stocks because they think, hey, what have we been told? Buy low, sell high. Yeah, well, that's obvious, right? That's obvious. But, you would have to have hundreds of thousands of dollars to buy low here and sell high here, or invest in options. And I'm not going to get into options. That's not my thing, but you can learn about stock options. But, to actually make any money of consequence in a short period of time, like a trader, in a matter of a couple of weeks here, to go from $60 a share to $90, I mean, yeah, it's great. It's a 33% return. You can make 33% on your money, but first you got to have capital, right? You got to put a couple $100,000 at risk there to make any, money of consequence, in my opinion. So, the big traders, they've got the capital, they've got the leverage. That's what they're doing. But for the average investor, how do you get a return? Well, there's a couple things we want to look at here. We're just going to use Chevron as an example. We're going to analyze this stock today because I think it's a decent buy right now. In general, all the markets are overvalued. So, we can understand that every buy that you're going to make at this point in 2020 is a risk. If you were smart like me and a couple other people, we bought in here, or around here because, we knew, and the truth is you never know. Anyone who says they know for sure, I knew that if I bought certain stocks and, they went down more, I'd be okay because they'd eventually rebound. But, long term, you never actually know what's going to happen when you start buying, right? It could go up or down. There's a lot of market factors. But in general, look, you get a 5.6 on your money, right? So whatever money you put in here, you can think that, hey, there's a little bit of upside here. The stock could go up above 100. You got a little bit of upside. It could go down too if something happens. But look at the trend overall. When it comes to stock chart analysis, I like to look at long-term and short-term trends. Let's see if it's going to load up here. It's going to change. No chart available. There we go. We got the year chart. But in the max chart, I think we can see that this stock at certain points, it was, significantly higher. And it looks like back in 2014, 2015, there was a correction in oil. It got up real high. There was a nice correction, and it's back up. And then there's that correction again. So, is it safe to assume that this stock is eventually going to recover? I mean, it's Chevron. It's a major company. It's a major corporation. One thing that you can do to answer some of those questions is look at the financials. It gives you a little background about the company, where it's headquartered, some basic stuff. You can go into the Wikipedia page from here. This is why I love Google Finance. Google Finance it's one of the best analysis tools, available to the public, in my opinion. And understandably, in June, like all the oil companies, they're getting hit. Their profits taking a beating. And where's that coming from? It looks like it's coming out of revenue. They lost significant revenue. According to last year, their average quarters were in 34 billion, and then the pandemic hit here in March. Started going down. They're about 5 billion down from their average, and here they're down about 20 billion dollars. But is that going to stay? Is it going to stay that way forever? I don't know. I don't think so. At the end of the day, you can look at net change in cash, net profit margin. Now that's a scary number, but it's not typical, and there's a cause for it. All the regulation, all the crazy things going on with coronavirus, there's cause for that. So you got to understand what is driving these financials. So overall, I think it's a decent stock and it's guaranteed return on your money. And I look at buying stock as long-term investing. It's putting that cash, instead of having the cash, you trade that cash for that ownership share, and it's going to pay you a dividend. And that's why it's important. I think it's important when you look at a stock that you've got upward mobility in price. Those are capital gains, but you don't invest in stocks for capital gains. You invest in stocks for compounding interest in the long term. And I'll do another video showing you some of that math. It's pretty crazy how quickly compounding interest can change. When it comes to financial analysis, comes to your long-term financial goals. Lot of information to cover here. So just subscribe. Please like the video. Please subscribe. Please comment. Anything that you're interested in, questions. If there's a stock you want me to put my opinion out on, just comment, and we'll take it from there. Guys, thanks for watching, and stay tuned. Keep checking back on my videos. I really appreciate it. And subscribe and give me those suggestions, guys. What do you want to learn about financially? Because we're here for creating financial freedom. I want to help you guys figure out new ways to reach your goals. So subscribe, and I'll talk to you soon.